What's going on, Trade Pros? This is Mark from Trade Pro Academy, and welcome back to our channel for this weekend's video. I'm going to be discussing today how retail traders can save themselves from account blowup. But before we do that, if you guys are new to the channel, make sure to subscribe and check off that notification bell to get notified anytime we go live. We're going to roll the intro right now and give you a chance to do that. We'll see you shortly. All right, Trade Pros, so now that you guys have subscribed to the channel, let's get into the nitty gritty here. How can retail traders save themselves from account blowup? If you guys know anything about us, you know that we love lists. And of course, I've got a list here for you guys. I'm gonna list 4 things that you guys can do and some things you should consider. However, before we go into that, I think it's important to note why and or how retail traders tend to blow up their accounts. All right, and working with a number of traders, we tend to see some of the commonalities between different types of traders that tend to blow those accounts. And the common elements are not really having a plan in place, a trading plan, not having correct risk management or any risk management, position sizing, not following any position sizing or scaling plans, and finally, and most importantly, the mindset. All right, there is a certain mindset you need to come prepared with when you're going to be trading. And if you don't have that right mindset in place, then it's very easy to fall off track and to start trading emotionally and not objectively. So when you combine those things together, that is a formula for an account blowout, whether it's in periods of high volatility or low volatility. Those several variables are very important and can lead to that blowout. So now that we've kind of identified some of those variables that lead to the blowout, what are some of the things that you guys can do as retail traders to prevent that from happening? Now, the first thing that you guys can consider doing is, relatively simple. It's putting a plan together. And more specifically than a plan, it is putting down a specific number of trades that you want to have on a session. All right, and this number of trades should be a certain number that gives you the opportunity to make the profit, but also to stay within your daily loss limit rules, your weekly loss limit rules, and your monthly loss limit rules. In addition to that, you are going to want to manage your risk accordingly. The biggest reason for blowout for new traders is not position sizing correctly. They take on positions far too large with far too much margin, and they erase those accounts, sometimes within minutes, within days, within weeks, and it's not a pretty scene. So the first thing that you can do to prevent that from happening is to set a daily limit of trades. All right, if you hit that daily limit, you are done, regardless of the result. Whether it's a win or a loss, you are done once you've hit that limit. Myself personally, I tend to trade around 3 to 5 trades a day. Towards that higher end, I'm considering myself over trading unless the market conditions are ripe for taking on more risk. All right, so that's the first thing you should do. Set a daily max number of trades and stick to that regardless of the result. If you get to say the 5 trades on the day and you're up on the day, you've essentially given yourself one more extra trade. You've earned yourself one extra trade. And if you take that trade and you lose on that trade, you're done for the day. And if you take that trade and if you win that trade, then you can take one more trade until you take your first loser and then you're out. The idea here is that you're using house money to take on additional risk, and you're not using your actual capital at risk. All right, so you're using the house money to risk, which means that worst case scenario, you end up better than what you started the session with. In addition to a max number of daily trades, you're going to want to manage your risk accordingly. What does that mean? That means to start not risking any more than 1 or 2% of your account on any individual trade. All right, You do not want one single trade to have the potential to wipe you out. And so splitting the trade sizes into a 1 or 2% portion of your actual risk capital will give you the ability to take on those trades, to win or lose, to stay in the markets, because the losers are not costing you an arm and a leg. It's just 1 or 2% of the account. If you get down, say 10%, you'll need to make around 11% to get back to green. All right. Whereas if you draw down the account by 50%, you're going to have to make a 100% return just to bring yourself back up to net neutral. All right. So just in summary, the first tip here is to set a max number of daily trades per day, and to also manage risk accordingly by risking 1 or 2% of your account capital per individual trade. Now, the second tip for retail traders to save themselves from account blowouts is to take a break after taking a loss. All right, I can't tell you how many times when I started off, the revenge trades came directly after getting stopped out. All right, and one of the best pieces of advice that I've ever received, and I'm relaying it off to you guys here, is to take a break after taking a loss. And one of the things that I like to do is I actually like to journal that trade after it happened. All right, so after I take a loss, I like to journal that trade. I like to take the screenshot, put in why I took the trade, what I was seeing, what qualified the trade, etc., and if I would take it again. And by doing that, it helps keep me objective, but at the same time, it also takes my mind away from the loss that just happened, and it brings me back to recenter myself. I can't tell you how many times that's helped me in the past, and I'm sure that it can help you. So that's another great tip, is to give yourself a break after taking a loss. Whether it's journaling that loss and seeing what you can learn from it, whether it's just setting a timer, going for a walk, getting away from your desk, going for a walk around your place, whether it's just setting a time limit timer, give yourself 5 minutes, put on the kitchen timer there for 5 minutes, and do not take any trades, don't do anything in that time. Give yourself a chance to recenter and come back with a clear mind. So that is tip number 2. Make sure to give yourself a break after taking a losing trade. So the third tip here is to actually look at your software platform. All right, and some software platforms actually have a feature available in them that allows you to set a daily loss limit and to lock yourself out of the platform if that limit is hit on the session. So we like to use Sierra charts, and they so happen to have this kind of functionality. And effectively what it does is it gives you no choice, all right? Whether you have the discipline to follow your risk plan and walk away if you've exceeded, or rather if you've hit your max number of trades on the session, it's a kill stop, all right? It's not gonna let you trade. Now, there are some drawbacks, and the one main drawback, and it really depends on the platform you're using, is that you can unlock the locked status on your account just as easily as it gets triggered. All right, just by going into the trading feature and to click the lock thing, and that will just effectively unlock it. You've got to have a little bit of discipline when you're using this. It is kind of a kill stop. It's not a 100% guaranteed that you're gonna commit to keeping out of that locked account, but it's a good step forward if you find you're having the difficulty to follow your plan, especially when you're down and trying to dig yourself out of that hole. Now, the fourth and final tip to help retail traders save themselves from account blowout is to actually communicate with their brokers. If the platform you're using doesn't have the feature to lock you out, this is a great alternative. What you can do is effectively reach out to your broker and ask for them to put on some conditions on your account. And effectively what you're doing here is you're giving yourself an absolute hard stop. There is no unlocking it once it's been triggered. So you can reach out to your broker and you can ask for a number of things. The two main things that I would kind of suggest for you to do to start is, number one, set a daily loss lockout amount. All right, and further to my prior example, if you're looking to risk $300 a day to make $500, you can tell your broker that you want them to cut you off for the session if the account hits minus $300 on the day. What that's going to do is effectively prevent you from being able to place any new orders once that amount gets hit. And if you don't have the discipline to walk away when you've hit your number, you've hit that max number of trades, or you've hit a loss and you're trying to dig out, this is really, really gonna save your back. It's kind of like your guardian angel, if you will, of keeping that capital protected in your account and bringing you back for another day, making sure you have the opportunity to trade another day. The other thing that you can consider doing is to actually increase the margin requirement on your account. Now, this makes sense for anybody that's using margin, and this would be pretty universal across stocks, across options, across Forex, and even futures, but I'm gonna be using this example specifically for futures because that's primarily what I like to trade. So increased margin requirement, for example, if you're trading a single contract of the ES Mini, it's about $400 of margin required to put up that trade. Now, the maintenance margin or the exchange margin, the overnight margin, is generally higher. It's around $6,500 or so, depending on the broker. But you can see the difference there between $400 to put on a trade versus $6,500 to put on a trade. And so what you can request of your broker is to increase that margin requirement so that you need to have a larger amount in the account before you're able to take on more risk. Right? So one of the members in our room actually uses believe it's 150% of the overnight maintenance margin. And so what that effectively does is it prevents you from getting too click happy, because even if you get click happy, you're not going to be able to put on those extra amount of contracts or put on that extra amount of risk because your margin requirements are higher than the day trading ones. And while that might seem like a bit of a limitation to some, for the people that are focused on protecting capital, on managing risk and making profits as a result of managing risk, that's exactly how it should be done. You're not looking to make millions overnight. You're looking to treat this as a business and to make consistent cash flow, to make consistent income. And by being able to respect your risk management rules, by preventing yourself from putting on additional risk, that is going to put you in the best position to prevent yourself from blowing up that account and putting yourself in that statistic of the 90% of failed traders. So I hope you guys enjoyed these tips. I hope you guys got some value from it. If you did, please smash that like button. It's going to help me know I did a pretty good job and you guys are enjoying what we're putting out there. In addition to that, you guys can comment down below what you guys want to see next from us. And until next time, good luck and good trading. Take care.
Hello, and thank you for watching this video. I want to take a moment to invite you to an exclusive online trading masterclass. In this event, you're going to learn 3 key things to help take your trading to the next level. Number 1, we're going to teach you a complete price action strategy used by professional traders on a daily basis. Plus give you the checklist so you know how to check off each step to qualify the opportunities. Number 2, we're going to teach you how to use advanced order flow analytics to help you qualify high probability, low risk trade setups on a daily basis. Plus, we're going to teach you how to use that order flow to disqualify the trades that you're used to taking that end up being stopped out. Number 3, we're going to show you how you can apply all of this information with a small account, because you could start small and scale up. In fact, that's the only way to start, and a lot of our traders are doing it in our community on a daily basis. This is an exclusive offer you could get online only at this event. I look forward to seeing you at this masterclass and teaching you these 3 secrets of highly profitable day trading. Take care and have a great day.